it's very important for me that you will see I will always have the memo with me, because the thing with ratios is the people who set up these things always knows more than me. Okay, so I always want to make sure that what I teach you is in line. The other thing is, they are I also want you to see, because you guys study from the papers, I want you to see how they actually mark this. Okay, so now, what I need to tell you this is all the questions I'm going to show you. 2/3 of every question, I mean now here, like this, liquidity. So if you look at this, it says liquidity, it counts out of 5. I can promise you that at least 3 out of 5 is just quoting the ratio and the, what do we call it, the up or down figures, right? If I look here, financing strategies, blah, 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 I can tell you out of that 8, at least 6 out of 8, it's just going to be quoting, giving the trend and the figures. So the smaller part of every question is the insight, and the insight is actually also very easy. It's very seldom, but let me tell you, of all the questions, there will always be one question that you're going to get wrong. Okay? So be prepared for it. It's the same with the theory. There will always be theory you're going to get wrong, because we don't know it. It's things they throw in with the sole purpose that you could not have exam trained for it. Because you guys are so privileged to have a lot of exams. Ne? So you moving towards the era where they have to throw in things like that to test if you understand more than just the steps. Okay? So that's part of life. Okay. Now, if I look at ratios, you will see, remember the notes I handed out for you previously. You will see, remember there was this page. And with this page, go back there, look at it. They always ask comments one of 3 ways. The first, it's not necessarily asking it, it's how they also give you the information. So they will either ask you the information of one company for 2 years. That's how we've been doing it grade 10 and 11. Where you say, in this year it increased from year to year, decreased, whatever. The second way is, they give you 2 companies. So they give you company AB and company XY, and they want you to compare those 2. They don't want you to compare years. They will say, this investor has got 7 million rand to invest. Which company would you advise him? And then you're going to look at the liquidity of the 2 companies and the risk and gearing of the 2 companies and so forth. The third one is the one that's tough. And that's the one where they give you 2 companies and 2 years. Okay. So they combine 1 and 2. Okay. So that's the way they do it. Right. Now let's go and see how it actually works. You have that? Don't you? Okay. I will then send that note on the group and I will print it for you guys. Can I then just ask you guys to go quickly? Okay, here we go. So now let's see how easy this is. This is my question. So the first thing, they ask me a little bit of theory. So they say, now look here what they say. The information relates to 2 companies. Okay, Guardian and Navara. Where comments or explanations are required, you should quote financial indicators, meaning the name, and figures. You see, that's what I taught you. And there they actually tell you to do it. Just wake up. Okay? Okay. Give a reason or an explanation. So you always do it. You quote the name. Now in this case, because it's 2 companies, You're not going to say increase, decrease. You're going to say more or less, better or worse. Right? So your wording is just going to differ. And then you're going to quote the figures and you're going to make a conclusion. So now, 3.1, they just quickly test theory. Choose the explanation, blah, blah, blah. So they give me a director, unqualified report, and a shareholder. So, no opinion was expressed on the financial position. It's not unqualified. Ne? The person who in this would be a adverse, ne? Or disclaimer. This would be a disclaimer. The person who invests funds in the company is the shareholder. Manages the operating blah blah blah, that would be the director. The financial statements are fair, that's unqualified. Okay, can you see how sneaky they are? Because in our heads, unqualified is never good. Because your parents keep telling you, you have to get a qualification. So in our heads already, unqualified is not good. Whereas here with reports, unqualified is the best. Because they didn't have to make any other statements, then everything is sharp. Okay. So now they put that one in there so you can put it with the unqualified. But that's not it. Okay. So now, let's look. Firstly, I want you to see the information. Now, if I look here on this page, can you see here? They give you the shareholding, the directorship. This is all questions. Information, they give you back information. So they say, the financial statements of Navara have not yet been audited. Okay, so that's already not nice, because it means you don't know if you as a potential investor or a current shareholder do not know if everything's above board. Cheryl Mabaso is the CFO, the Chief Financial Officer of Guardian, and Nathan is of Navara. Cheryl is going to retire March 23. Which year are we currently? If we look here, we are currently, what's the years they give us? They give us 22, 23, meaning she's going to retire now. This is the final statement she's responsible for. Okay. Extracts, can you see they give me the two separate, and they give me 2 years. Right. Now they give me number of shares, new shares issued. Can you see all of this is information on the shares. This is all about the shares. Okay? And the information here is the capital, the loan, and the bank. Right. Then when I go on the next page, they talk about repurchasing shares. They talk about shareholding. Can you see every time it's both companies, both years. And then they give me financial indicators. Both years, both companies. So now let's go to the first question. So the first question says, identify the company that is managing its working capital well. Now what is your working capital? This is your liquidity. And this is what they start doing now. And can you see, so the one thing you need to see in this final papers is they give you headings. So they already told you liquidity. If they have replaced liquidity with the word working capital, you would still know this is liquidity. Because what does liquidity do? Liquidity is it gives you money enough so that your business can operate. What's the word for operate? Working. You see? So working capital is the cash that works for you. So now they want to know which one is managing their working capital. Quote, 2 financial indicators. Now how am I going to read the marks? The marks is going to be like this. You're going to quote ne? You're going to quote two ratios, ne? From two companies. So you're going to say this ratio of this better worse than this ratio of this, right? And then you're going to make a conclusion, and that's where you get that extra tick. So for me, you can actually get 4 out of 5 there. Ne? Just your conclusion is going to be 1. This company is better or this company is better. Okay. Now they want you to comment on the one that is better. So now let's go look. If I look here, the first thing I'm going to do, if I look at liquidity, what is my ratios for liquidity? My ratios for liquidity is the stock, the debtors and creditors, and the current and assets. And now let's go look. Where do you see it? I want you to highlight your liquidity ratios. So I see here, current, asset test, debtors collection, creditors payment. Can you see they only gave you 4? Don't fall in the trap of highlighting 6 because you know there's 6. Right? Okay. So now, you guys, I need you now. Where did I put my ruler? Please take a ruler in for this. So let's start with the debtors and creditors because they are the easiest. Okay? So if I look at my debtors, ne? Which company is doing better here? Guardian, ne? Because your debtors you want less than 30 days. Right. So you can see Navarra's is increasing and Guardian's is decreasing, and their debtors basically pay 2 weeks after they bought. Okay. Now, let's look at the creditors. Now, if I look at the creditors, alone, Navarra is better, ne? Because Navarra takes longer, which is good. Okay, but now, let's quickly see here. I would say this was 40 days and they pay after 60. This was 45 days, they pay after 55. This makes that it's bad. Yes. Because their debtors takes very long to pay. Okay, so I will say this is good because can you see the debtors are going down, ne? And the creditors are going up. You guys see that? Okay, now my question is, how do they want me to comment? Now I'm going to show you the memo, okay? Because for me also, every time I do this stuff, I'm learning something new. Now look what they did. Can you see? They chose a company, okay? Then they quoted. Can you see what they did? Is they only quoted the company they chose. Okay? So they have chosen this company, saying debtors collection decreased from this to this. So they'll get a mark. Can you see? A mark for the financial indicator, a mark for the figures. Don't get into this thing by saying buy 3 days. Don't do that. It wastes time because now you have to make a calculation, which is not necessary. Just say it decreased from 22 to 19 days. Right? So, creditors. Creditors, 1 mark, increased from 80 to 50. There's 4 marks. Okay, let's just make sure. They say, if incorrect company is identified, award marks for the correct financial indicators. So can you see, even though if you chose Navarra, but you wrote 2 indicators, you already got 2 out of 5. How many of you didn't know which indicators? All of you know the 4 liquidity indicators. Can you see what I mean? easy marks, ne? It's just now your figures are going to be of the wrong company, but you can still get 2 marks for that. So can you see you have a max of 2 out of 5 already? Okay. Now see how they answered it. So they say, further explanations beyond figures and trends are not required. Ne? Because they didn't ask for it. Look at the question. They say, identify the company, ne? Quote 2 financial indicators and trends. They didn't ask explanations. You guys sharp? Okay. So now let's look at the current ratio and the asset test ratio. So, if I look at this one, can you see Navara decreased, Guardian increased, and can you see Guardian is still the closest to 2 to 1? Okay, so he's obviously better. If I look at the asset test, also, what happens? Can you see how much Navara is decreasing? You see, this one only went up 20 cents, and can you see the correlation between the current and the asset test is in a good correlation. The stock there is only 0.5 to 1. Can you see that? So the stock is not the biggest asset. Okay, right. Whereas here, if you look, it went down, ne? And there's basically 0.7, meaning most of the stuff is in stock. Can you see that 0.2 is the cash and the debtors? Okay, but let's go easy again. Not try and complicate this. If you just said the current ratio increased from 1.521 to 1.721. The asset test increased from this to this. 4 marks. So this was 4 easy ticks. And if you don't forget to name Guardian. Okay. You start breathing. So let's go to the next question. So, financing strategies and gearing. Can you see the word gearing? Ne? And they talk only Guardian. So now you're only going to work with Guardian. If you go there, which 2 ratios are you immediately going to highlight? You're going to highlight debt equity and capital employed. ROTCE. Don't be so caught up in the abbreviation ROTCE that you cannot identify the words going with it. Right? Sometimes they will say ROTCE. But now I want you to see the capital employed, because we're working also with the loan. Okay, so now, first thing you do is you're going to go and you're going to highlight those 2. You're going to go to the answer, ne? And you're going to comment. So they say, what were the causes? Please never read here. Always read here, because if there's a discrepancy where the answer sheet and the question paper is different, you have to go according to the question paper. Okay, I want to quickly just tell you why. So here we go. What were the causes of the change in the debt equity ratio? Provide 2 causes with figures. Now, what is my debt equity about? Loan, shareholders' equity. So one of 2 things could have happened. I could have decreased my loan. I could have issued repurchase shares. So now let's go look. And I remember they gave me the answers here. There they give me capital and they give me loan. So I want to work with this. Okay. Now they want to see that you see what the ratio is about. So what are you going to quote? The share capital increased from this to this, and the loan increased from this to this. Let's see if I am right. Can you see? 1 mark for increase in loan, 1 mark for interest in ordinary share capital, 1 mark for quoting the figures. Don't go and do the by or the percentage. Please, don't do that. You don't even have to say by issuing shares. You just say the ordinary share capital increased from this to this. The loan increased from this to this. This is 4 marks, easy. You can't have this wrong if you know your ratios. Because if you go into that question and you don't know that risk and gearing is debt, equity and ROTCE, then you will not be able to answer this. So the first thing you need to do before you come back to school Tuesday is you need to know your ratios. Please, I say this a million times, you do not count on your format sheet. So here we go on. What's the next question? Next question, so I've got there. Explain why it was wise for the company to make more use of loans. Quote and explain one other financial indicator. Now, is this about if the bank is going to give me a loan? Now please listen. What did I tell you? Debt equity is about your financial risk to the bank, right? Okay. What is ROTCE about? To see if it was worth making the loan. Right. So now what is this question? Explain why it was wise for the company to make use of loans. So will I do the debt equity or the ROTCE? The ROTCE, because I want to know, was it worth making the loan? Now, I'm going to quote the ROTCE, which I have highlighted. Ne? The ROTCE is 16.6. And I'm going to compare it to what? The interest on loan. And what is the interest on loan? Was it wise making the loan? Yeah, it was, because the ROTCE is more than the interest on loan. Okay? So, you're going to quote the ROTCE. Now look what they say. This is 2 marks, ne? They say comment the financial indicator 1 mark. So, return on capital employed 1 mark. Ne? You say it increased from 13 to 16. 1 mark. When in doubt, always quote that it with a trend. Ne? Don't ever just write one thing. Quote with the trend. Okay. So there you got 2 ticks. You see, easy ticks, ne? Now they say, what must you quote on? Now you have to quote on the gearing. What do you need to do? You need to compare the interest with the ROTCE. So, I would say this. The company is positively geared because the ROTCE of 16.6 is bigger than interest on loan 14%, and that would give you 2 ticks. Okay. And you can go read through all of that. It just looks extremely more well-polished sentences. Ne? But we are not, one of us, language people. So keep it simple. They just want to see you know the words, positive, negative, geared, and you know to compare it with the interest on loan. Can you see you can get 4 out of 4? Okay. Let's go to the next one. Yes.
Before you move on, after one of the PhD, was supposed to quote everything.
No. With liquidity, please listen. Remember, this is a memo, and a memo needs to make provision for everything. So, if I look at this, they ask me to quote 2 financial indicators. So, any of these 2.
Or we just choose it.
And what I'm saying is always be safe and quote 1 per group. Don't quote 2 in a group. This time you were lucky and they did mark everything, but sometimes they will say you have to quote at least the current ratio, something like that. Okay. So you guys are fine with this one. So the next one, they talk about dividends, earnings, and returns. Can you see that they actually give you the ratios there? Because they say dividends. What is dividends? Oh, don't let me not use green. Let me use pink. What is dividends? Dividends is dividends per share. What is earnings? Earnings per share. What is returns? Remember, we are talking about the shareholders, so it would be the ROSI. Okay? So 3.4 is those 3. So now they're going to ask me a question about that. Can you see the higher grade or the difficult part of the question for them is you being able to pair the question with the ratio. The answer itself is not difficult. So now let's go look. What are they answering? Now they're only talking Navarra, ne? So don't quote Guardian. Explain 1 financial indicator. So you're going to quote 1. So you can get at least 2 out of 3. Which indicates that a concerned shareholder should not be satisfied with the change in the dividend policy of the company. Now, the dividend policy is not the dividends per share. The dividend policy is the payout rate. Okay, so this dividend policy that they are talking about here, this one, they are talking about this one. Okay, be careful. They're not talking about the dividends being paid out. They are talking about how much of the earnings is paid out and how much of the earnings is kept as a retained income. Now, why should we be concerned? So now, if I look at this, I would say, first of all, I would say the dividend payout rate increased from 34.8 to 103.8. So there, 2 ticks. Why should he be concerned? So if I think about the EPS is 100%. Ne? So now it means it's being split between the dividends, the DPS, and the retained income. So this one makes sense because 35% goes to dividends, meaning they retained 65%. What happened here? What happened? It means, remember, if I have my appropriation T, I have net profit before tax. I have tax, dividends, retained. What do I have this side? The old retained income. So, this is 100%. So, what did they do? They took 3% from the old retained income. So, what are they doing? They're not making their savings more. They are using their savings and making it less. Okay? So, how will we answer that? You can just say, they are using the old retained income. That should give you 4 marks. Ne? To attain 103.8% dividend payout. Ne? That's what it means. Now let's go see, does it make sense to you guys? So if I look at this, let's say my net profit was 1,000, my tax was 300, so how much do I have left? 700. That 700 is my earnings, right? This is what I earn. So from that 700, I can decide we're going to save 200 and the other 500 we pay out as dividends. But what are they doing now? They're saying, oh, we're going to pay out the full 700 as dividends. And, oh, last year we had a 300 retained. We're going to also use some of that. So now let's say we also use 100 of that and we pay out 800 rand dividends. Was my earnings 800? No, my earnings was only 700. Meaning they took from my savings. So now my retained income is going to be only 200. You guys get what's happening? So they are making their reserves less. Is it a bad thing? Not necessarily. No? It's not necessarily a bad thing. But you have to go look at your liquidity if you have the money to pay it out. And you also have to go look, don't I need more reserves? Because maybe we saved a lot of money during COVID because we didn't know what was going on. So we kept our reserves very high. That's why I have such a low dividend payout. And now I realize, oh, but I don't need to keep so much retained income. I can make my retained income less because we are now doing business again. So I can pay out and say thank you to my shareholders for being loyal to me. Right? So we can pay out a lot of dividends. That's not a problem. It's not immoral. It's fine. The problem comes in if they don't have the cash to back the payout. That's when the problem comes in. Okay. Now, I don't know if they're going to ask it next, but if they ask it next, you're going to look. Remember, we're busy with Navara. And what did we say about Navara? Navara has got a liquidity problem, ne? Okay. So, I would say that is why this guy is worried. Let's see how they answered it. They answered it or marked it like this. They say the dividend, so for the indicator, oh, sorry, what's happening? For the indicator, 1 mark. So if you set the dividend payout rate, there's 1 tick. Everybody can have that. It increased from this to this. So you already have 2 out of 3. You see? Now they say, what are we going to say? What's your comment? They can just say, funds of retained income was used. Remember, that's what I told you. 3 marks. You don't have to write. Can you see it's every time slashes? So it's ors. Or this, or this, or this. Okay. So let's look at the next one. Explain whether the shareholders should be satisfied with the earnings and returns. So now they're talking EPS and ROSI. Okay, I just want to make sure you understand when we talk dividends, you always have to look, are they talking about the dividends per share, or are they talking about the policy, how they pay out the dividends, how much of the profit is going to dividends. Okay, so now I want to quote those two. You guys, this is easy ticks because they tell you which two to quote. Can you see at the answer? Literally, if you quote earnings per share, it's 1 tick. If you quote ROSI, it's 1 tick. Now, the figures and the trend is also 2 ticks. It decreased from this to this. Don't do that. It decreased from this to this. Can you see? 4 out of 6. 2 out of 3. Now we comment. Why should they be concerned? Okay? Why would you be concerned if the earnings is decreasing? Because it means your profit is not as profitable as last year. No? The earnings is going down. So the piece that you're going to get dividends out of is getting smaller and smaller and smaller. The business is not doing well, or as well as it did. So look at the comment. They should be concerned as the return is now lower than the return of an outside investment. Remember what I told you? I told you when we were here, when you do ROSI, you compare it to the interest on fixed deposit. Okay? So, what is the interest on fixed deposit? If I go look here, it is 9%. What did we get our ROSI? It's 6.4. Ne? So that's your 2 ticks.